Hello, everyone. Welcome to another Webinar Wednesday by Smartkarma. Today, we have the pleasure of welcoming Insight Provider Mark Chadwick, who will help us take a look at the big picture of Japan's small caps, including growth drivers and key trends in the Japanese market. Mark will also highlight 3 stocks that bear keeping an eye on if you're looking into Japan. Mark has over 20 years of experience in equities and asset management in Asia and Japan. Most recently, he held positions in equity sales for Japanese and global investment banks in Tokyo and London. And he has developed a database for evaluating the board structures of listed Japanese companies using publicly available data and a scorecard of 21 key metrics grouped into 3 broad pillars: entrenchment, board independence, and shareholder alignment. The goal is to provide a framework to judge the state of governance in Japan and help investors understand each company's strengths and weaknesses. Mark, let me welcome you properly to the webinar, and I'm really curious to hear what you got for us today. So please feel free to take it away.
Thank you, Michael. Thanks for inviting me onto this webinar. Welcome to everyone that's listening as well. So yeah, today, as you mentioned, I'll be talking more about the small caps rather than the corporate governance side. That's obviously another very interesting trend that's been happening alongside a lot of the things that I'm going to talk to you about today. But really, why small cap growth? Let me just give you a few numbers from last year. Base was up 456%. Free was up 213%. Rackus was up 139%. These are big moves for small cap Japanese growth stocks, but they're still relatively small in market cap terms compared to the well-known US tech companies. So really there is a massive opportunity to find smaller companies in Japan that are still relatively undiscovered by global standards. And a large part of that is really because Japan is just way behind the rest of the world in terms of its digital transformation. And we'll just talk about how and why that is. But now we are actually seeing an acceleration of those trends. And importantly, it's very much supported by the government. So I think it's a very, very exciting time to have a look at Japanese small cap growth stocks. And hopefully we'll just highlight a few of the interesting names for you later on in the presentation. Why are we here? Really, Japan lagged in terms of digital transformation. And a lot of it is down to the collapse of the bubble. This is all quite well known. I won't go into many details, but the lost decade really turned into a lost couple of decades, and companies became very, very cautious and defensive. Japan lost a lot of ground economically, particularly to China, and that was really what the big problem was that needed to be turned around. And this is where Mr. Abe steps into the picture. And around this time, around 2012, 2013, there really was a break from the past and a big shift from the government to try and tip Japan more towards growth and innovation. It was a big shift in the political mindset. There was a lot of policy changes put in place to spur enterprise formation, increase access to funding, and put in place legal framework for a lot of startups. So that all came in conjunction with changes to, the more well-known changes to the governance code, etc. So over the last 5 or 6 years, what we have seen is that an ecosystem has been put into place for entrepreneurs and companies, smaller companies, to thrive and grow. And to a large extent, that's actually worked quite well. So corporate profitability has improved, returns on equity have improved, we've had higher shareholder returns in general, and that has led to a stronger Japanese economy. And it's that change in the economy, the confidence that has brought about, that has allowed the mindset to change and really provide a platform for innovation and opportunities for the smaller cap companies to actually thrive. And this chart really just shows how that works. This is just a chart of the Nikkei with the red line going down was the post-bubble collapse. And the index really broke that trend around the time of Abe's start, around 2012, 2013. So it has worked. However, it is still really a period of transition. There is still very much an old Japan and a new Japan. There's over 4,000 companies listed on the market, So that clearly there is a lot of rubbish as well. And you have to be very, very careful of what type of stock you're looking for. You don't just want to buy the Nikkei and hope for the best. But there are, as I say, a lot of gems with very little analyst coverage, and that's the kind of stock that we're looking for. Just to highlight that as well, this chart shows the mother stock market, which is really the startup kind of market, probably equivalent to NASDAQ. And you can see how that outperformed the broader topics index last year quite substantially. So I think the market is really just starting to recognize some of these winners and the different sorts of business models that are doing it quite well. So what should we be looking for? Where should we be looking to find stocks in Japan? I think this is probably the most important slide in the deck, really. So I'll spend a little bit more time here. But there's three key catalysts, I think, driving this shift to a newer economy. The first is just the number of mega trends, and these are the global trends that are also impacting Japan in terms of digital transformation, the next generation internet, etc. The second thing, as I mentioned before, is the political willpower. That's finally there. The Japanese government is also trying to transform itself. They've set up a digital ministry to make a shift within government to actually put a lot of their own processes more digital now. So there's political willpower. And the third thing that's been impacting the market really is COVID. And that's been a huge accelerant in showing Japanese companies and Japanese politicians how badly prepared they've been and how far behind they were in terms of where they needed to be for things like remote working and digital signatures, etc. So those are really the three key catalysts that are pushing us towards this new sort of Japan. Now, I think digital transformation, there's various sub-segments to that I've put underneath there that you can see. That's, I think, the biggest near-term opportunity. And again, because Japan has lost those decades, it is quite a long way behind the US and other developed economies. And that is I think, where you'll see probably the biggest near-term opportunities. If we just think of a couple of stocks, just as an example, WealthNavi, which is a robo-advisor that was listed in Japan last year in 2020, actually had a great IPO debut. It was up about 120% on debut. That is around 10 years behind Wealthfront in the US. Wealthfront in the US was founded in 2008, doing the same sort of job. So again, you can see that gap that exists. So these business models are coming through in Japan now that are about a decade late. But that, as an investor, I think gives you an enormous opportunity because you can see very clearly that there's a roadmap. You can see that with companies like Base in Japan, which is about 7 or 8 years behind Shopify in the US as well. So there's a number of different examples of that where there's very similar companies that are now just starting to get going in Japan that have got well-trodden roadmaps for growth. Probably the next most interesting thing will be the next generation internet driven by the shift to the cloud and artificial intelligence, blockchain, IoT, etc. That's been a huge issue for Japan over the past number of years. There's been a huge aversion to put anything in the cloud in Japan. There's a lot of fear around security and data, but that's finally as well being forced upon them to change. So companies are having to ditch their legacy tech now, and that shift is just beginning. And we'll talk about a couple of the AI stocks as well later. Autonomous tech is an area where Japan has led the world in terms of industrial robots and factory automation. So hopefully there should be some opportunities there as well. And carbon neutral. Obviously, Japan relied very heavily on nuclear power. That is changing, and the energy mix in Japan, like the rest of the world, will have to become much, much cleaner, and there'll be opportunities for stocks there as well. So what do we look for in terms of trying to find these small cap gems? First and foremost, I think it's exposure to one of the mega trends that I've just mentioned. And secondly, is it actually growing quite quickly at the moment? We want to see there's some proof of concept behind these companies. But basically, we're trying to find, is there a big market? Is there a moat? Is there any competitive advantage? And is management very good? So just in simple terms, the three M's of market, moat, and management are what we are looking for on these smaller Japanese companies. So I'll just highlight three companies that we find quite interesting at the moment. They're a little bit different, but just to give you a flavour of some of the kind of stocks that are exposed to these themes. So the first one is Money Forward, which is a cloud-based accounting software company. It's very similar to Intuit in the US or Xero in Australia. And obviously it's very much geared into enterprise SaaS and digital transformation. Now, is it a big market? Well, it's just starting, but there is a huge potential market opportunity here. There's no foreign players involved in the market. We think it's around a $2 billion market. And if you compare that to the current sales, that are around $20 million. So this is a company that can grow at 50% year over year for quite a number of years before they've exploited that opportunity. There is a moat, as with most SaaS companies. There's high switching costs. If you're a first mover into getting your product into a company, it becomes very, very difficult for the companies to change providers. It just becomes such a hassle and a burden when people have already learned the system. And you can see this already with Money Forward and Free as well, which is a close competitor. They both have very, very low churn. So they get in the door, and then they start to add new products and functionality, and customers just stay with them and start spending more and more money along the way. Management, again, and this is different from the typical Japanese salaryman. It's founded by a Wharton MBA. He's moved around to different companies as well, Sony, Monex Securities, for example. And unlike most Japanese management, again, he's very well aligned with shareholders. He's got a big stake in the company. And that is something that if we're looking to play the growth in this company over the next 5 to 10 years, you want someone that's clearly well aligned with shareholders. Another stock that we think is really interesting, perhaps one a little bit more for the future, is Neuralink. This is an AI company. They have a lot of IP in image recognition software. It's quite similar to a couple of Chinese companies, SenseTime and MegV, if you're familiar with those. Again, this company has a huge market potential, particularly within smart cities, which are just really starting to get developed. And it's all about turning analog spaces into digital maps and digital spaces. It can include things like car parking and crowd safety, etc. So it's potentially $1 trillion market, according to many different surveys. Obviously not just in Japan, that's a global number. It's difficult for us to estimate how big this market could be in Japan, but clearly this company has the IP in the right sort of area and is already tying up with larger Japanese companies like SoftBank, like some of the real estate companies, to put this AI software into practical use already. Again, management, I think, is key. Shigematsu-san is ex-McKinsey, head of their AI team. And I think importantly for this company, the advisor on the board is a gentleman called Matsuo-san, who's a Tokyo University guru. He is probably the preeminent person on AI in Japan. He's also sits on the board of SoftBank, for example. So he's very, very well thought of within Japan. And his Tokyo University lab is generating a number of different startups around AI. So PK Shah is another company that has been born out of this lab. The third company I wanted to highlight is just something a little bit different. It's not as techy, I guess, as the others. And it's been around a while longer as well. But it's very much, again, geared into the whole idea of transforming the Japanese economy. This is just a trading company, a wholesale company, of which there are 200 listed on the Japanese stock exchange. But this is the 13th biggest, and it really boils down to focusing on a particular niche. And in this case, it's scientific and medical equipment. and they're just destroying the old way of doing business in Japan. They're very similar to a Monetaro, which is also a big Japanese company, or an Amazon, and they're providing a very, very sophisticated distribution system that's manned essentially 100% by robots, and that just destroys the competition in terms of getting product to market. So again, that there is a huge market opportunity for this company still, despite the fact it's been around and done very well already. There's about a $4 billion wholesale market just for scientific equipment and medical equipment. And this company's sales are just under $1 billion at the moment. So we think over the next 3 to 5 years, there's ample room for this company to grow. Another reason to like this company, again, is very strong management. It's a family-run business, and the family still owns a significant amount of the stock, showing, again, that they're very, very aligned with you as a long-term shareholder. So those are three of the companies that we would just highlight as examples of companies that are geared into this new economy theme. We've done, if you subscribe to Smartkarma, we've done a number of these reports on various companies. You can see there's those listed there on the left-hand side. So if you would have any questions, please let me know.
Thank you very much for that, Mark. As Mark said, a lot of his previous work on these companies is on Smartkarma, and you should definitely check it out or get in touch with us if you're not a subscriber. Our very capable sales team can help you out. So, Mark, I guess you made a really good case for the small cap market in Japan, but what are some of the challenges there? What would be some of the drawbacks of investing in such small cap companies?
Yeah, thanks, Michael. It is a very, very interesting part of the market to have a look at. I think if I was going to say what are the issues really, I guess, are not just small cap issues in Japan, but it boils down to overall market issues, and there is fairly weak disclosure, I would say. Certainly, English language publications can be an issue with some of the companies. The general level of IR can be an issue. I think some of the smaller companies are actually making quite a decent effort now of putting out English language materials. Certainly, Money Forward, Neural Pocket have good slide decks that they show, so that they can actually be better than some of the larger cap traditional companies in many respects. But overall, I think there's around 4,000 companies listed in Japan. And analyst coverage is obviously very, very sparse at the low end of that. They tend to concentrate on the big 200 names or so. So finding research on these companies is quite difficult, and clearly going around and visiting them all is quite a challenge as well. So that's why I think it's important to have that process of focusing on those particular areas that I highlighted and looking for exposure to those mega trends, and looking for growth as a sign that something good is happening in those small caps.
I see. There's a couple of questions from the audience that I wanted to address, and one of them is a broader picture one, and the other concerns Money Forward specifically. So, yep. So maybe I'll take the broader picture one first, and then we can go into the specifics. So, do you see any catalysts, such as policies in the near future, that will unlock the valuations for the companies that you mentioned?
Policies from the government, do you know?
I think that's what the question is going for, yes.
Well, the general outlook, as I mentioned, is that the government is very much promoting digital transformation. That much is for sure. Are there any specific policies? I mean, Suga, I think, is continuing with the policies that Abe put into place. This year, we'll get another iteration of the corporate governance code, for example, which will put much more pressure on companies to have independent boards, etc. And the continued pressure from shareholders and policymakers to promote change within corporate Japan. I think that much is very clear, and I don't think that will change. Suga in particular, it has a number of policies that are, again, trying to promote, I guess, a more level playing field. He's trying to lower the mobile phone, the 4 or 5G rate plans that consumers have to pay. So he's very focused on trying to cut a lot of the red tape, as Abe was, and obviously he was part of the Abe cabinet, so that continues. So I think that the policy environment remains very supportive, and then really it's up to investors to, I think, try and discover these companies. We'll talk about money forward probably next, but the valuation at 18 times EV to revenue, it's pretty pricey. It's not as if they're completely undervalued companies. So I think they've started to be recognized. But clearly what we're arguing is that there's a much greater runway going forward. So those valuations will obviously come down quite sharply.
Mm-hmm. Yeah, that's actually a very good segue into the money forward question, which is, are there any key differences that you can highlight between money forward and Xero that an investor that compares the two should be aware of? The attendee asking the question is an LT holder in Xero and is a prospective holder of money forward. And as a follow-up, he asks, why is the valuation so different to free, for example, which you mentioned the money forward is 18x, free is 43x.
Yeah.
So what do you think on that?
So I think there's no real big difference between money forward and Xero in terms of the cloud-based accounting software. I mean, this is one of the reasons I think I like this company, is that clearly Free and Money Forward have both looked at overseas businesses that have been successful. So they've clearly learned from Intuit. They've clearly learned from Xero. And there's a very blue ocean in Japan. There's a huge market opportunity for them to execute on that very, very same business model within Japan. So the product itself, I think, is very similar. Now, obviously, the regulations within each country, are different. Both Money Forward and Free use accountants largely to sell this product to small businesses. So to that extent, we think it's going to be very, very difficult for a foreign company to enter into the market because there clearly are language barriers. There's barriers in terms of getting the product into the accounting networks for them to sell the product. So, but I think at the base, the core business is very, very similar. I suppose one small difference is that Xero has got the global market to go after, and I don't think Money Forward or Free will really be looking to expand much out of Japan. I'd be very surprised. But Japan as the third or fourth largest economy in the world, probably they don't really need to. They should have ample room to grow over the next 10 years. And just looking back at where Xero used to be 10 years ago, I think the revenues were also around the $100 million mark. So similar to where Money Forward is now. So I think if you look at Xero 10 years ago and you look at Free today, that's the way to compare these businesses. Now, in terms of the valuation differences between Free and Money Forward, I mean, that's a good question. That's a question that comes up quite a lot. Clearly, Free is the market darling. There's a very charismatic CEO, and that stock is, at the moment, I think, branded as the winner in the space. Now, Money Forward, I've just talked about the cloud accounting business, but there is also a big Money Forward consumer side of the business, which at the moment is really freemium software, I guess. But that is a big potential market for this company as well. That's a chief difference between this company and Free. But at the moment, it's detracting from gross margins. So Money Forward will have lower gross margins than Free at the moment. And that's largely because of the costs that are going into supporting the consumer side of the business. But overall, if we look at, say, over the next 5 to 10 years, I expect both companies to do very, very well. But I think Money Forward may have potential other areas to grow into that Free doesn't. So Money Forward has that brand name amongst consumers in terms of personal financial management that Free doesn't. So That could be an interesting area. And I think they're both doing things like setting up venture capital operations as well. So this business that I've described with a potential market opportunity of 2 billion actually could be multiples higher than that. So I think that, again, these valuations, they seem very, very expensive at the moment at 20 times, 40 times revenues, but really we're just at the very start of this growth.
Thank you very much for that. I want to touch on something that you mentioned just now regarding money forwards and fees, basically domestic market growth. And I wonder, when it comes to Japanese small caps TAM, are they mostly focused on their domestic market as well? And do they have room to grow there? Or are there some that have more kind of international market aspirations? And how many are there?
I think most of them are domestic focused, to be honest. I mean, it probably depends on each individual segment. But I think these businesses are so new, they're so young that, they've literally come to market at a very, very small scale.
Mm-hmm.
They would have been in a VC house if they were a US business. So at the moment, mm-hmm. I think it's very much just focusing on the Japanese domestic market. But if you take, the typical Japanese company at the moment that's preparing their accounts, they're either doing it on some legacy system that was sold to them 20 years ago, or if they're a very small business, they're doing it on Excel. So there's a huge opportunity to shift these 3.5 million SMEs in Japan over to a cloud-based system. That's clear. So I don't think it's like Xero that needed to get out of New Zealand, needed to expand out of Australia to go into, say, Europe. For money forward and free, and you could say the same about a lot of the business enterprise software companies. There is a huge, wide open market in Japan that is not yet in the cloud. And I think that's where a lot of the opportunities will be.
Got it. That makes sense. So why should an investor, when they're considering these companies, and you mentioned, for example, how Neuralink is similar to, for example, Megvii in China. So why should investors look at these companies and not similar companies in China or the US when it comes to these high-tech ventures?
Yeah, it's a good question. I mean, I think these companies, the business models are quite similar for sure. If your mandate is to invest in China, then obviously you look at SenseTime. And if the mandate's in Japan, you look at something like Neuralink. But clearly, I think for me, the advantage of Japan is that it's a less efficient market where we're very much at the start of these trends, and there's less knowledge about that. And given that there's much less analyst coverage in Japan than typically you would find in the US or China, I think these stocks are very undercovered and obviously under-owned as well. There's very little. For Neuralink, I've just had a look. There's hardly any institutional ownership in that stock yet. Money forward, there is a little bit more, and free as well, but they're still relatively young companies in their histories. Like I said, if these companies were in the US, they would still be part of some VC portfolio. So they're coming to market very quickly, and analysts are basically struggling to keep on top of all the new companies that are getting IPO'd in Japan. So yeah, I think you've got here very good regulations, reasonably good compliance, good governance. So that's why I think it should be a key part of what people are looking at.
There's another audience question, and I'm not sure if you have, but the question is, have you ever looked at Kobe Busan in terms of it being a young company with a transformative retail offering and efficient supply chains? Do you have any visibility on that one?
It's not something I've looked at, to be perfectly honest with you. But yeah, it's clearly performed very, very well in the market. And I think there's a lot of opportunity for companies to do something that's slightly different from the run-of-the-mill in Japan, take market share. So whether that's these sort of new economy stocks or whether it's old economy stocks, there's clearly a lot of sleepy, poorly run companies as well. So if you can find one that has good management, then there's clearly opportunities to take quite a lot of market share quite quickly. So, but that's not a stock that I've personally written on or done any work, I'm afraid.
Sure. So a question coming through the chat, both Money Forward and As One had a re-rating in 2020 after basically a flatline price trend before. How can one assess that these are not red stocks and are so tiny structural for New Japan? Is the question.
They're not, what kind of stock? Sorry, red.
Sorry, fad stocks.
Fad. Okay.
My eyes are not what they used to be.
We're all getting a little bit older. So I think the key thing is to go back to this chart. These companies involved in these major mega trends, and these are not just Japanese trends. These are global trends, but these are the most important, I think, for Japan. And clearly, does Money Forward have exposure to a mega trend? Yes, it's helping Japanese businesses to do their accounts much more quickly and much more cheaply. That's digital transformation. Is it growing quickly? Yes, it's growing at about 50 or 60% at the moment. So these are structural changes within the economy, and these companies are clearly benefiting from that. I think you can see on the revenue chart there how quickly that business is growing. So I don't think that's a fad. I mean, sure, market valuations have expanded, and maybe it's worth 10 times, not 20 times. But if we're thinking of holding that business for the next 5 years, which for these sort of small caps, I think we should be, then they will grow into those valuations, I think.
Just as maybe a last question as we're coming close to time, you briefly mentioned policies before after a question from an attendee. And I wonder, Prime Minister Suga seems quite busy right now with COVID-related challenges, and the government does seem like it's being strained by that. So is there an impact on those business-friendly policies, do you think? Like, do you think that they'll take longer to implement now? And what will be the impact on small caps?
Yeah, the short answer is no, there won't be an impact. I mean, obviously COVID has thrown a spanner in the works for a lot of governments, and everyone's trying to figure out a way to solve that particular problem. But I think the policies are all largely in place in terms of supporting smaller businesses. There's a couple of sort of new policies, and one is the drive to get more foreigners into Japan. So the idea of Tokyo being a financial capital, that has been a policy that's been kicked around many times before, but it's come up again. And I think it's come up again because apart from what's happening in Hong Kong, Japan needs more foreigners here. And it sees this as an easy way to get foreigners here. And I think to use it really as a thin end of a wedge to cut regulation, to cut red tape. So to ease visa restrictions for financial professionals, to make changes to the tax system. These are all things that you can do under the cover, I think, of Tokyo as a financial capital. But the reality is that it'll be a much broader thing going forward, that Japan has a demographic problem and needs foreigners. So I think a lot of the changes that they're talking about now are really to address that for the longer term. So Suga is definitely behind, still trying to transform the economy. I mean, he's literally got one of his key men now as head of the digital transformation agency within the government. So obviously a lot of the procedures for dealing with the government are very, very paper-based. So if you want to change your address, you have to go to the local ward office and fill out 3 forms and then take it somewhere else. It's a hassle. And so the policy are clearly in place to get everything online into the cloud and make it easier for everybody. So these policies are continuing. And I think COVID, again, has really shown the government that they're a long way behind, and therefore we need to change. So that's the answer. The government is very much a part of this, and the companies that can benefit from this, mostly I think, are the smaller cap companies. that are 100% engaged in these sort of big trends.
Got it. So that's just about all the time that we have today. Thank you very much, Mark, for lending us your time. And thank you, everyone, for being with us. If you have any more questions, do feel free to email us at research@smartkarma.com. Mark, thank you very much once again.
My pleasure. Thank you very much, Michael. And thanks, everyone, for listening.